It's great to be joined by Robert Lloyd George, who is the founder and Chief Investment Officer of Lloyd George Advisory in Hong Kong. And we have a regular monthly chat, and we've got a lot to talk about this month. How are you, Robert?
I'm well. It's always a pleasure to catch up with you, John, and have a calm discussion about the volatile events in world markets.
We have had the Brexit vote, and I guess that's where I'd like to start to get your comment on the aftermath. We've seen political changes, and it looks like we're in for a 2-year divorce.
Yes, I mean, it is a historical watershed. There's no question about that, John. I mean, we didn't anticipate it any more than any other pundits did. Very few people saw it coming, even though the polls were close. We did, however, have quite a lot of cash and some gold in our funds, so we've been up 5% over the 2-week period and got reinvested afterwards. I don't think there's such a big impact on Asia in our special situation. But let's think about Europe and the world. I think it's an important signal that the British people are saying we've had enough of uncontrolled immigration. We don't see the benefits of free trade. And that, to me, is the big change. And I think Donald Trump is signaling the same popular mood, which is, okay, free trade might sound like a great idea, and it has been for the world for 30 years. But at this stage, we, the working class, middle class people, have no stake in it, have no interest and benefit from it. And I think that any government now has to take account of that. So I think that whether or not Trump gets elected, we're likely to see some more protectionist policy. And that is a major change in the international investment scene.
Now, taking a look at the markets post-Brexit, well, let's start with the Chinese market, because it seems to be auguring QE for not just the Chinese market, but certainly markets around the world.
Yeah. It's interesting because today the Bank of England decided not to cut rates, and everyone thought they would, and that they would flood the system with liquidity to counter the shock or the economic downturn which is expected to come from Brexit. Maybe it won't be as bad as all that, but I do think that there is a tendency, especially in Japan, which we're watching very carefully at the moment, to venture out further, possibly into the territory of helicopter money. We've had steep negative interest rates in Japan. I think they're almost minus 1%. So they're the most extreme case in the laboratory, and it hasn't worked at all well. The yen has strengthened. Their business situation has not improved. And I think we are really nearly at the end of these central bank maneuvers. So I would say in Europe, too, they've got to bail out the Italian banks, which is a very big deal indeed, in some ways bigger than Brexit in financial terms. And so how much further can these central banks go? Yes, everybody's now saying the Federal Reserve won't increase rates this year, so that means off to the races for the Dow Jones and indeed for the emerging markets. But I feel cautious because I don't think commodities will rebound. I don't think world trade is growing. And I think this protectionist policy down the road, 6 months, 9 months, will eventually catch up with investor expectations.
Money can't get a return in fixed income, and so investors seem to be crowding into equity markets in search of yield.
Right.
And you just have to wonder how long those shares can justify the prices. If you've got any dividend cuts or a slowdown, you've got an equity market that is very full.
Yeah, and then you have to ask the question, which sectors do you want to invest in? And clearly the utilities and telecoms, consumer staples, even tobacco and things like that have done very well. And I think they will continue to do well as long as we have a deflationary environment where they can sustain prices for their services and goods. And in general, the consumer is hurting. So luxury goods will hurt, but consumer staples will do well. And we see the same thing in Asia, and the internet companies are doing well because they're helping consumers get a better deal, whether they're going on overseas trips or they're buying clothing or electronic machinery, that they get cheaper prices from the internet. So there is there is growth in the Asian equivalents of Amazon and Google.
Now, could you tell us about? Can you hear me, by the way?
Yes.
Yeah. Could you tell us about your allocation to the various Asian markets, and of course the high point being the Indian market?
Right. As I say, in early June, I was pretty defensive. I had 25% cash. I'd increased our exposure in Australia, where we had a couple of smaller gold mines, Evolution and Newcrest. We've got a very good healthcare company there. We had about 15% in China and a little bit less in Hong Kong. We've cut those allocations now. I'm still cautious about the direction of China's economy, except in special situations, which are travel, education, and internet. And we have put our cash to work since June 25th in India principally, which is now rising to 20-25% of our bamboo strategy. In Indonesia, which we have raised to 5% and eventually 10%. Japan is around 10%, and we've added also in Korea to about 10%. So we are diversifying quite widely, but our biggest allocation is India. And I think the reasons are very straightforward. We see the earnings growth there is the strongest in the region. The rupee is stable. The government is pro-business. The growth rate of the economy is rising from probably 7.5% to 8.5%, maybe 9%, if they pass their VAT or goods and services tax this summer or before the end of the year. That will have a big boost their economy. And really, we just find great companies in India selling at 1 times their growth rate or less. And, we find good companies in Korea, in Australia, in Indonesia, but the growth rate in India is double that of the other countries. And I think I would argue that looking out the next 2 or 3 years, we see that India is a protected environment when it comes to these external political shocks. They were not affected by Brexit. They will not be affected by Trump if he's protectionist. And they will not be much affected by a slowdown in the Chinese economy, which in most of the other Asian economies will feel quite rapidly. So I think we looked very hard at the trade numbers, and we see that India is principally a domestic play on their huge domestic consumer economy, 1.3 billion people, of whom half are under 25, and many of whom are for the first time getting their first bank accounts and getting connected on internet and mobile phone. So it's a really big change in India.
Going to Japan, I know that you are able to find some very special companies there that are actually benefiting from the burgeoning middle-class Chinese population.
Right. Well, we've invested in a number of cosmetics and healthcare companies that are selling principally to Chinese tourists. And in fact, Japan has been a favorite destination for Chinese tourists, and Korea as well has also benefited. But there is, I think, something of a break. If the yen persists in being so strong, that will hold back Mr. Abe's plan to reinvigorate the Japanese economy. So I think we'll see that he's postponed the tax increases. He's trying to change the constitution so they can increase defense spending. That would also be stimulating. And he's pushing forward social policies, I think, which would try and counter their demographic challenge. So I think that they will try anything, really, in monetary and fiscal terms to get their economy moving again. And I think Japan is an interesting market to be monitoring at the moment.
Now, when I was in Shanghai recently, I heard a lot about the South China Sea claims, and I wonder if you could finish off with a comment about that.
Well, I mean, I think we weren't surprised that the International Court in The Hague ruled in favor of the Philippines, that indeed China's occupation of these coral atolls in the South China Sea, which the British sailors called the Spratlys and the Parasols, was in fact illegal. And they're only 50 miles off the Philippine coast in some cases. Vietnam, Indonesia, Brunei, and the Philippines all have counterclaims on these islands, or not even islands, they're not even above water at high tide, which the Chinese are now occupying and building airstrips on. So I think it's a setback for China. How will they react? I don't know. There is some talk of a compromise with the Philippines, joint development of undersea oil and gas resources, which, by the way, they haven't found any oil and gas yet, but there clearly is a value in occupying these very important sea lanes. About a third of the world's trade goes through these narrow sea lanes that come around the bottom past Singapore and then up past the Vietnam coast into China, Japan, and Korea. So they're very important sea lanes which have been patrolled and policed by basically the U.S. Navy for decades, and now China is determined to stake their claim. I hope and believe that we will be able to defuse this situation peacefully. I don't think anybody wants conflict, but it is a concern, and I think it probably weighs on investors' minds.
Well, Robert, as always, that was a great update, and we'll talk again this coming month, and I hope you are enjoying a fun summer.
Thank you very much, John. It was good to talk to you.
We'll go to a break now, and when we come back, my talk with my old friend